Embarking on the journey of investment can be both exhilarating and intimidating, especially for beginners. The financial world is vast, filled with opportunities and risks. In this guide, we'll delve into 10 invaluable investment tips tailored for those setting sail into the realm of finance. Whether you're looking to build wealth, save for retirement, or simply grow your money, these tips will serve as your compass in navigating the financial seas. Chapter 1. Define your investment goals. Before setting sail, you need a destination. Define your investment goals clearly. Are you saving for a down payment on a house, planning for your children's education, or building a nest egg for retirement? Each goal may require a different investment approach, so having a clear roadmap is essential. Chapter 2. Educate yourself. Knowledge is your most powerful tool in the financial world. Take the time to educate yourself about different investment options, risk profiles, and market dynamics. Read books, follow financial news, and consider taking basic investment courses. The more you know, the better equipped you'll be to make informed decisions. Chapter 3. Diversify your portfolio. Don't put all your eggs in one basket. Is a golden rule in investing. Diversification helps spread risk across various assets, reducing the impact of a poor-performing investment on your overall portfolio. Consider a mix of stocks, bonds, real estate, and other assets to create a well-rounded investment strategy. Chapter 4. Start early and stay consistent. Time is a powerful ally in the world of investing, thanks to the compounding effect. The earlier you start, the more time your investments have to grow. Additionally, consistency is key. Regularly contribute to your investment portfolio. Even if the amounts are small, consistent contributions over time can lead to substantial wealth accumulation. Chapter 5. Assess your risk tolerance. Understanding your risk tolerance is crucial. Some investments come with higher potential returns, but also higher volatility. Assess how comfortable you are with the idea of your investments experiencing short-term fluctuations. Your risk tolerance will influence your asset allocation and investment strategy. Chapter 6. Emergency fund comes first. Before diving into the world of investments, ensure you have an emergency fund in place. This fund, typically covering 3 to 6 months' worth of living expenses, acts as a financial safety net. It prevents you from having to liquidate investments in times of unexpected expenses or job loss. Chapter 7. Keep an eye on fees. Investment fees can eat into your returns over time. Be mindful of the fees associated with different investment vehicles, such as mutual funds, exchange-traded funds, ETFs, and robo-advisors. Opt for low-cost options whenever possible to maximize your returns. Chapter 8. Understand the power of compounding. Compound interest is the magical force that allows your money to earn returns on both the initial principal and the accumulated interest. Reinvesting your returns can significantly boost your wealth over the long term. The earlier you start reinvesting, the more substantial the compounding effect. Chapter 9. Stay calm during market volatility. Markets are inherently volatile, experiencing ups and downs. It's crucial to adopt a long-term perspective and not be swayed by short-term market fluctuations. Emotional reactions to market movements can lead to poor decision-making. Stick to your investment strategy and remember that market downturns can present buying opportunities. Chapter 10. Periodically review and adjust. Financial markets, economic conditions, and personal circumstances evolve over time. Regularly review your investment portfolio to ensure it aligns with your goals and risk tolerance. Adjust your strategy if necessary, but avoid making impulsive decisions based on short-term market movements. Conclusion. Investing is a journey filled with opportunities for growth and wealth creation. By following these 10 investment tips for beginners, you'll be better equipped to navigate the financial seas. Remember to stay educated, diversify your portfolio, and maintain a long-term perspective. With patience, consistency, and a sound strategy, you can set sail toward a financially secure future. Happy investing!